Good morning, Tampa Bay. We are doing a special Saturday video this week. Excited to be with y'all. And we have been asked a ton about our thoughts on what's happening here in the market. And I wanted to actually do this live today. Making a great, video that's been curated is a fun thing to do. But what I've learned is our community and our viewers really, really enjoy the interactive experience. So if this is your first time tuning in this channel, welcome. And this is a special Saturday event. We usually do our live streams on Tuesday where the Tampa Bay area and people who are considering moving to the area can jump in, do some Q&A with me and the team. But this morning, I want to give my thoughts on what's happening here in Tampa Bay in the real estate market. And again, a lot of questions about this. You see a lot of gloom and doom on the television or maybe in social media. And the question really becomes is that true? Is that real? Could that happen? Is it happening? And this morning, I hope to help you answer some of those questions. Now, who am I? My name is Juan Alcalá. I am a licensed realtor and a team leader with the True Living Group, where we make videos that are all things Tampa Bay, what it's like to live here, what it's like to work here, what it's like to play here. We're going to talk about the market update this morning specifically. But I just wanted to introduce myself. Over the last 3.5 years, we've helped over 100 families relocate to the Tampa Bay area and have been completely blessed because of this YouTube channel. And one of the most commonly asked questions right now is, what do I think is going to happen with the market? So I wanted to jump on, tackle this topic live. Like I said, show you some resources so you can do your homework, because here's what I'll say. No one, and I mean no one, knows what's going to happen. We all have ideas and insights. And if you study enough, maybe you can convince yourself, or I could convince myself that I know exactly what's going to happen. But if that was true, if that was honestly true, I wouldn't be sitting in front of you. I'd be off drinking Mai Tais somewhere, retired forever, because I was smarter than the market. And most people, and I mean all of them, aren't able to do that. Now, there are great investors. I am not out here claiming to be anyone's guru. What I would say is I'm going to show you the resources you can do this homework for yourself and make a qualified decision. I have an opinion about what I believe is what is going to happen, but in all sincerity, I have bias, and I'm not afraid to say it, right? I have bias about my kids. I have bias about my wife. I have bias about where I live, and I have bias about what I do. I try to be as objective as possible with you and with myself when I'm making decisions. And that is my goal today, is hopefully to help you make informed decisions. And again, if you have questions or comments, please feel free to leave those in the chat. I want to engage with you directly, but I'm going to tool around the internet today and show you guys some resources. We're going to get as deep as you want over the next probably 25 minutes here or less, and happy to answer your questions. But I just kind of want to show you, start out with what's going on with the U.S. housing market, because inventory is on the rise, but prices are still increasing, which is super strange when you think about it. Interest rates are starting to decline, which is great news. And I'll show you where those guys are. Interest rates are sitting currently as of Friday as well, so you guys can have some perspective on that. And we'll get into the weeds a little bit here. And let's start right there. Let's start with what's going on with interest rates, and then that'll kind of help give us a picture about housing and things in general. And I want to say good morning to everyone. Good morning, Kevin. Good to see you, my brother. Happy Saturday. I know most people are used to seeing the curated and the published, the pristinely edited videos on Saturday, but today I just wanted to do something unique. I've been promising you guys that I would give you my thoughts on what's going on, so I wanted to spend some time. Morning, Juan. Corey tuning in from Cbus. That's Columbus. For those of us who are unaware, it's 49 and gloomy in Ohio. It is. It did start out brisk this morning, brother. It was 49 degrees when I woke up, but I think it's already like 50 something, sun is shining, we're on our way up. So thank you for watching as always, and thanks for connecting with us. All right, let's get into what we're looking at. This is a website called Mortgage News Daily. It is a public resource. You don't have to pay for a subscription. I love this website. Now, I happen to be a real estate nerd, so I love looking at this stuff and love to see what's happening in the marketplace. But as of Friday, the close of the market on Friday, interest rates on a 30-year fix were coming in at 6.72% on average. Okay, so I want to share that with you. I know this might be a little bit small on your screen, forgive me, but they were coming at 6.72% on average for a 30-year fixed rate loan. If you were going to go a 15-year, you could get that down to 6.13 on average. Now, that means that there are mortgage rates that are lower and people who are paying higher mortgage rates, but that's the average, okay? The 30-year FHA is coming in at 6.15. So we're tracking closer to that, that something with a 5 handle in it, but we're not quite there yet. And the 30-year VA loan is coming in at 6.17%. So keep your eye on that. Now, this is some of the lowest mortgage rates we've had in about 5 months, and some of the lowest mortgage rates over the last couple years. If you look at this line I'm drawing here, I know it's tiny, but if you can see that line, most of the peak is well above that line. So you can see we're starting to dip into some positive territory from where we have been. Does it compare with your 3.75%? No. But to be honest with you, the only real way we're ever going to get back to that type of interest rate, if that's what your hope is for, is we're going to have a lot of pain in the economy. And I'm not a huge proponent of the market falling apart. I know most people aren't. I don't want to see a ton of people lose their jobs so we can see interest rates hit 3% again. But if we can get them down to mid fives, I know that our market is going to respond pretty dramatically. I honestly think anything below 6% is going to start to move a little bit, but it doesn't unlock enough affordability to get everybody back in the game. We got to be in that, 4.5 to 5.5%. If we got there again, the market's going to rip. But I don't foresee that happening anytime in the next quarter, 6 months. I don't even think it's going to happen anywhere near this year. I do believe that we have a chance to get into fives. Will we stay there? It's hard for me to say. Again, I'd be speculating. And one of my favorite quotes, and I always share with people as I'm going through anything data related, is by Ray Dalio. And Ray says that those who live by the crystal ball are destined to eat glass. So when I'm giving my projections, if you're joining late, I want to reaffirm this, y'all. This is one man's opinion. This is based upon my homework and my research. And I'm not here trying to be anyone's guru. I've been in real estate for 13 years. I love the business. I've seen it go up and down. I've seen the worst of it. And I've seen what some would consider the best, which was also challenging too during COVID. So we're going to break down these numbers. If you want to know what's happening here in Tampa Bay, the reason we're starting on interest rates is today is first, I want you to be aware of what's happening in the marketplace in terms of a 30-year loan. Number two is if you understand where interest rates are or where they're headed, you can project that out into the market and say, okay, what is likely to happen if interest rates continue to go down? Well, that's going to bring a little bit more affordability back to the marketplace, and people who have been sitting on the sideline may jump in the game. Or sellers who have been not wanting to move because they've had a low interest rate are now more open to that idea. So it could bring more inventory to the market too. And these are the things. It's going to depend on where you live, right? Where we live here in Tampa Bay, we have a lot of home builders. And those home builders are putting a lot of pressure, downward pressure on market prices. And I'm going to show you guys some specifics here momentarily. But that's not happening in areas like Tampa proper and St. Pete because there's not as much new construction. So you have to look hyper local on what you're trying to accomplish when it comes to real estate. It's always about the location, right? So keep that in mind. And I'm going to share with you guys some of the stuff that makes me concerned. Well, I won't say concerned, but I need to be aware of, and you should be aware of today, not just the prices. Okay. So just so you guys can get a handle on that and what we got going on. Let me say hello to everybody who's popped in late. Good afternoon or good morning, y'all. This is, like I said, I'm not used to popping in on Saturday morning, but Desiree, good morning. Shout out to New York. Good to see you. We got PM Michael up in, Pete up in Pennsylvania. Good morning, sir. Love to see that. And then good morning as well. Love that. Was it Shinola 75? Good morning. Happy to see you. All right. So let's get back into the weeds a little bit here. Let's start with the US and what is happening in the market before we get into Tampa specifically. All right. So this is directly from Redfin. The reason that I'm using this, y'all, is because this is a public resource. Yes, I have access to lots of fancy data and analytics, but if you don't pay for those subscriptions, you don't get it. So I want to give you something that you can use and you have access to. This isn't the only resource. You can go to Zillow. You can go to Realtor.com. You can go to Trulia. They all have data similar to this, and they're pulling that information from the the Realtor's MLS. So the data that comes from us locally, that's what's being broadcast out to here. I will say this, there's some variance between what we see here locally and on here. They call it a margin of error. It's pretty close. And I'll show you ours too as we get going this morning so we can kind of go through it. But here's what's happening in the United States housing market through February 2025, because, you know, in January, people were starting to jump off a cliff already about housing prices. But the United States median home sales price, okay, this means a house was listed for sale and it actually sold. That is up 3% year over year on all housing types. So that's going to include single family, condo, townhomes, villas, that type of thing, mobile homes if they own the land. All home types are up 3% versus 2024 in the month of February. So that's something to take a look at. Well, what's happening with single family homes? That means a house that's detached, right? 2.9% it is up year over year. What about townhomes? Townhomes are up 1.8% in the United States year over year. Condos up 4.6%. This I find very interesting. Year over year in the United States housing market. Okay. Now, if I go back to all home types, but what is happening is home sales are down nationally, down 5.5%. Okay. So prices are up, but home sales, the number of homes selling, is down nationally 5.5% to 325,000. And it shows you right here that national average mortgage rate, 6.8%. I just showed it to you guys so you can see it in real time, what's happening day to day there on Mortgage News Daily. So this is great. Now let's get into the supply side, because this is where people really start to trying to figure out what's happening in the marketplace and the demand specifically. Right now, we just showed you that there's less home selling, 5.5% less home selling in the United States than there is currently right now at this time last year. So homes that sold above list price, we're still seeing almost 25% of the entire market in the United States sell above list price, but that is down from 2024, roughly 1.5%. Okay, so it's something worth taking note of. So there's still a quarter of the market that's selling over asking price or over list price, if that's the news you're familiar with. Home price drops are approximately 18%. That's a 3.8% increase over 2024. You know, if you go back and look at the chart from 5 years ago, you know, we can get you can see where COVID takes off, and then price drops really started as interest rates increase. We know that where that happens. So just keep your eye on that if this is something you're focused on. All right. Now, let's get into where people are still moving to. And this is the thing when we get asked all the time, Juan, are people still moving to Florida? I'm hearing that people are still leaving Florida. The answer to that is true on both sides. People move in and move out of states all the time. Our net population grew by 160 something thousand last year. So more people moved in than they left. But there are people leaving the states, or Florida specifically. A lot of retirees on fixed incomes who couldn't keep up with the cost of living have chose to move to places like the Carolinas, Tennessee, and so forth and so on. Unfortunately, what I think is going to happen in the next 3 to 5 years, they're going to live through the same event that they just lived through here in Tampa, because the cost of living is just outrageous with property taxes everywhere and insurance costs and things like that. But that's the reality of what's going on in our marketplace. But we're still seeing a tremendous amount of clients who, want to invest in real estate for buy and hold, meaning that they're going to keep that either for their family or generationally. They're still picking up real estate here, and we still are moving a ton of people. Like I said, we moved around 100 people, over 100 families in the last 3 years alone. Just this past month, I've had 56 scheduled Zoom calls in the last 30 days. Meaning people reaching out to us wanting to move to the state of Florida. So you can see Florida's the only red-ish state on this the migration trend. And again, we're looking at Redfin. You can see this. I will put this resource. As a matter of fact, let me grab this and put it in the chat for you guys. I'll just put it right to the overview, which is the top of the page. So if you want this data, it'll be in the description later, but you have the link to it right there. And if you go over here to this little search trends, you can put in your city. Now, if you have a small city and it takes them a long time to report data, you may not see that information, but you will find all of the metropolitan areas available to you for sure. Okay, and I'm going to show you that now. So rather than typing every one of them in, I just went ahead and pulled them all. So here is for Tampa, since we're talking about what's happening in Tampa real estate specifically, but I wanted to share with you where mortgage rates are and then where the U.S. market is. Now, last month, I was getting phone calls, right? Juan, we see the market's going down. It's crazy out there. Prices are dropping, and you are seeing price drops, and we'll get into that. However, however, month to month, year over year, housing prices are still going up. We just showed you that in the United States. And after a January that was lackluster here in Tampa, you can see the dip there. Let me show it to you right here. This dip here, we bounced back immediately. And we're currently sitting at a $450,000 median sales price. That's the middle of the activity, remember, up 5.4% over February of 2024. Okay, so it's a very interesting market, right? You got inventory that's rising pretty. We are above pre-pandemic levels, which is in a normal range, but it's above where it was pre-pandemic. We are up in the number of homes sold. We sold 427 properties at up 1.4%, but our median days on market is increasing. This is the thing I want you to be aware of. What does that mean? How long is it taking a home to go from listed to pending? It's taking about 54 days before, on average, before a contract comes in. So that's something to keep your eye on as you're kind of working through this in the Tampa market specifically. Now, let's get into specific home types, because you guys know single family versus condo on a coast right now is a whole different world. The single family home prices are up 8.2% year over year, 489.9 for a single family home, up 8.2% according to Redfin. And you can see that pretty heavy bounce back up. Okay. Now the number of homes sold is down 2.3%, probably about 30 houses. And the median days to market on a single family home is approximately 46. Okay. So keep that in mind as well. Now, as we go down, what's actually happening? This is one of my favorite things to look at. Let me get to condos before we get out of there, because I wanted to make sure that you guys saw that. So we show single family. What's happening in condos? Well, condos, even though condos are a challenge coastally, February still proved to be a pretty strong month. Condo sales were up 2.2%. I'm sorry. The median sales price on condos was up 2.2%, and the number of condos was up sold was up 7.6%. So keep that in mind also. Okay. We get back to all home types. And then what I want to show you here is people are asking, like, what kind of deals can I get? Right. Because this could be a time to catch a deal. I definitely think it's a great time in new construction. If you watch our Tuesday live streams, we've been in the weeds about the incentives, $20,000 towards closing cost, and interest rates at like 4.5 and 4.9%, which is way better than the 6.5 you guys are seeing, or the 6.7, and paying, compensation to your realtor and things like that. So there's a lot of deals to be had, a lot of pressure, because they need to sell those homes they're building to keep their people working, right? But this is one of the things that we get asked often is like, hey, what's a fair offer to make on properties, right? And right here, 96.6% of homes are selling at the asking price, at the list price. Okay, now that is down just a touch, 0.39%. If you want to look at a specific property type, say, hey, I'm looking for single family homes, not condos, go in there in single family. This is 96.9, so it's closer to 97%. So give or take somewhere, what we're seeing right now is there's about a 3 to 5% threshold of negotiation available from a seller in the marketplace if they want to sell their property. Okay, so just kind of giving that insight. And let me say hello to everybody that popped in. And y'all, we are on a clock today because I have a Zoom call with a client following directly here. But let me say hello to everyone else that's popped in so far. And thanks for joining us this morning. We're talking about Tampa Bay real estate. Corey, what's up, my man? Says good morning from Knoxville, Tennessee. What's up, my brother? Sorry, I'm looking at the screen over here and reading you guys. What do we got here? Hopefully DeSantis can get rid of property tax. Yeah, man, I hope so. I hope that's, what a blessing for Floridians and homeowners. It's going to be tough to get it across the table. I think there'll be some modifications, but if that happens, also our real estate market will see a pretty good influx, would be my guess, right? Twin Sane in the membrane said, hopefully only get rid of property taxes for one owner occupied per person. Otherwise, you'll need to be able to afford real estate. Yeah, I totally agree. I don't think that should be a wide open thing. I don't want corporate hedge funds coming in and buying homes from Floridians to add to the portfolio. I agree. It should be, if there's any guardrails, it should be primary residence, 100%. Or even if it's a second, I can get a second home, but like at some point you got to get to like, this is ridiculous. And I think primary homestead is probably the way to go. So that's great. Great. Selling for asking prices is the kind of a wild stat because those houses have been sitting some time. Well, this is a really good question. Like, I don't know how old you are or how long you've been in the market in paying attention, but like traditionally, if you go back prior to COVID, homes were regularly sitting in markets between 40 and 70 days. That's not uncommon. When you look at the absorption rate of how quickly homes it depends on what marketplace you're in, but COVID got people conditioned that selling a home in a weekend was normal. And that is not. If you go back and look historically, that is anything but, right? Homes aren't supposed to appreciate 10 or 15% in a year. If you go back and look at the United States, it's basically 40% every decade, all the way back to the Great Depression. And that means you're 3 to 5% steady state every single year. You shouldn't be making money when you sell your primary residence 2 years later on average. I'm not saying that there aren't markets where that happens. It absolutely does, but this is a good thing. And what is a decent or relatively decent time for a property to stay on the market? In a normal world, it takes three to 5 months to sell a house. Right? This last stuff you've been staring at for the last 5 years, that ain't real, y'all. That's not how the market works. So, but it's a fascinating observation, and I appreciate you bringing that into some. Have price reductions of 10%. Yeah, there's going to be price reductions of 10%, but that's not the standard, right? So like this is where people let emotion run wild over data, right? We're showing you real time. This isn't my data. I'm not curating this. This is public resources, right? So if you go back to where we are here in Tampa, the last year over year in February, we're up 4.5%. So you can't have a standard deduction of 10% versus where you were last year and be up 5.4%. The math doesn't math, right? So are you finding reductions of 10%? Absolutely. We've negotiated deals better than that in the last month for sure. But I also got a seller 40,000 over asking. So again, it's going to be property specific, neighborhood specific, location specific in any market, right? In 2012, you could find homes that were going over asking price, and you could find homes that needed to cut $50,000, $60,000 off on a $250,000 property. So, make sure when you're looking at data, you're not just trying to validate your feelings. If I can give anybody any advice, that's the cool thing about data, but data is also dangerous because it can be used for or against any argument, right? For or against any argument. So what's the demand in Tampa? 96.9%, right? But the number of homes sold above list in Tampa, specifically for single family, is only 15%, but it's still happening, right? I just gave you an example for us, but it's still out there taking place. But there are definitely properties who are taking 20% less than they asked. We call those aspirational priced sellers, meaning we all knew that home wasn't going to sell. There was some agent who was willing to put a sign in the yard and try to sell that property at the seller's request, which is okay. But for me and my team, we don't put our flag in the yard and pretend like we're going to sell a house. We need to make sure that we're positioning the client to win. So it's something to take note of. And here's specifically, and this is why I want to get into it, because you put 10% are having up to 10% price drops. Well, 34% of the homes in Tampa have taken a price decrease. 34.7, that's up 0.2% year over year. This is something to take note of, right? What's happening? Well, price increases are up. Okay. But if you look at last year, look how flat this has been. Right, we've been pretty steady on that line below there. So it's definitely interesting insights to look at. Okay. If you're someone who believes that the market is going to continue to go down, that's your bet. Okay. You could be right. You may not be. If you knew, you wouldn't be looking for my information. And I wouldn't be on here sharing it with you as well. Like I shared with everybody, like I study the market, but I'm not Nostradamus, and no one is. If they could time the market, they wouldn't be giving you advice. They would be off somewhere collecting the money that they're already winning with. All right. So just kind of keep that in mind as you're going through data, right? let me get to some more of these comments before we roll off. I've got a few minutes left before I have to kick off here, guys, but I want to share this stuff. I've got so much more. Come back to our Tuesday live streams at 7 or I can get way, way deep in there. Love that. All right. It says, B. Wallace, I keep hearing we are near a home market downturn like 2008 and prices are going down. You can get into all the historic data behind this. I love sharing this. Like, there's not evidence for that. Is there evidence? Is there evidence, number one, data for a downturn? Yes, that's real life. Like that the market's supposed to ebb and flow. Like if I go back and show you, here's a good one. Such a good one, guys. I want to answer all these questions too. Okay, this is the Fred. This comes from the St. Louis Fed, the Federal Reserve. Okay, so this is their data. S&P Core Logic. Okay, so if you look at, this is United States. I want to make sure, no, this is Tampa specifically. If you look at the Tampa Home Index, this is what's happened since 1987 when they started tracking this info. You had this huge increase in 2006. The bottom was over here, right? Fell out in 2008, 2009. We technically didn't bottom until 2012 here in Tampa. And then we've seen this rise, steep increase. And this is where it hockey sticked, right? So the question is do you think that there's not enough foreclosure data? And I can show you that here too. This is why this is like, you want to bounce around and share all the information with everybody. But let me show you this. This is from our MLS specifically. So this is the best data I can get my hands on. I want to show you guys foreclosures and short sales, because how are we going to have a downturn like 2008 if people have mortgage rates of 3.2% and they're paying $1,800 for their mortgage? They can make that payment on McDonald's wages. So that's probably not going to happen. It would take a major event for that to occur, right? Townhouses and condos. I want to get the single family. I know I'm going quick. Y'all bear with me. Monthly distressed. Okay. What you're looking at right now is the distressed sales from February of 2025 versus 2024. So for everyone wondering, I'm going to run out and get all these short sales, right? Or foreclosures. There was 19 foreclosures in Tampa Bay in February of 2025. And there was 19 foreclosures in February of 2024. No increase year over year. So 2008 happened because people couldn't hold on to their properties. Here we had 4 short sales, meaning that they tried to sell their home for less than it was worth. The bank agreed. Now that is a 300% increase, but that number is still only 3 more than it was before. So this is where you have to do your homework and understand what is happening in the marketplace. People aren't at risk of losing their homes, as you're hearing people say out there, right? And if they are at risk, just because a foreclosure process starts doesn't mean that it's going to go through, because a lot of people have a lot of equity in their home. So again, you got to look where the puck is going, kind of thing, and not just hear like, hey, prices are down, because I just showed you that prices are up. And that wasn't me trying to manipulate anybody. It's literally in the chat that I put, or the link that I put in there. So guys, I want to go way deeper on this topic. If you want more content like this, will you please let me know? Put it in the chat. I'm happy to do this. This Tuesday at 7 p.m., we do our normal live stream. I spend an hour with our community in there going through that. And I want to get really deep on this subject. Unfortunately, I need to go off and help the next client relocate to the area here. Thank you so much for joining me. I hope you got value out of today. I'm going to put all of the links that I was going to share with you that I will go into depth on Tuesday. I will put them in this video so you can read every one of them at your leisure and be as informed as you like, so you can make the best decision for you and your family. With that, I sign off. You guys have a great morning. God bless. Take care.